Hello from the Authors Guild Foundation, and welcome to this installment of Money Matters. We're here for book royalties, what authors should know. This is an important thing to understand if you're traditionally published or are seeking to be traditionally published. And I think plenty of the info also applies to the royalty statements you get from self-publishing platforms. Our Money Matters host, Erin Lowry, will guide the conversation with her knack for putting financial terms in plain English. And we're very grateful to have Gina Denny stopping by today to share her wisdom on royalties. Thanks to the audience for being here and for submitting questions in advance. Erin has worked those into her notes, and you can pop additional questions in the Q&A box here in Zoom as we go. It might be hard to answer really specific questions while we're live, especially if someone would have to look at your contract to know the answer or anything like that, but we will answer as much as we can by the end of the hour. Thanks to the support of our donors, the Authors Guild Foundation is able to provide free educational programming like this. The foundation is the charitable arm of the Authors Guild, which is the oldest and largest association of authors in the US. You can learn more about our legal services and other member benefits at authorsguild.org. As always, views expressed in our webinars may or may not reflect the views of the Authors Guild. And now, Gina Denny is the Operations and Royalties Administrator for Ayesha Pande Literary, and she has a unique blend of experience in the publishing industry and compliance and finance spaces. She's a writer, editor, and conference faculty member with nearly 25 years of experience in banking, finance, compliance, and other spreadsheet-focused endeavors. She's also great at social media, where she's generously helpful to authors, which is how we knew to invite her to be here today. So look for her online. And Erin Lowry, welcome back, Erin. Erin's the author of the four-part Broke Millennial book series. She's been featured widely in the New York Times, Wall Street Journal, on CBS Sunday Morning, CNBC. She's written for the New York Times, USA Today, and as a columnist for Bloomberg Opinion. Erin and Gina, thanks for being here, and I'll leave it to you. I'll be here if you need me.
Well, thank you so much, Johnny. It's wonderful to be back with you all today. Welcome to another Money Matters webinar. Again, we're talking about book royalties, what authors should know, because receiving royalties is a major accomplishment for an author, but it can also be pretty confusing. Royalty statements are not always straightforward, at least not to us, and sometimes they could have mistakes. So it is really important for us as authors to understand how to read a royalty statement and how to advocate for ourselves if and when necessary. So I'm so excited for Gina Denny to be here with us today to learn how to decode a royalty statement. Now, again, if you have a question to submit throughout, and thank you so much to those of you who have pre-submitted, please feel free to drop it into the Q&A. We'll get to as many as we can during today's conversation. But Gina, let's start with the reason we are all here. How do you even read a royalty statement?
Very carefully. So some of them are very, very simple and straightforward. The first thing that you're going to be tempted to do is to scroll all the way to the very bottom and look at that bottom line. And I'm not going to stop you from doing that. I know that you're a human, and that's going to show you either a $0 amount or it's going to show you amount that you are owed. From there, I would then work your way upwards. Pay attention to what is listed as the royalty rate that they are paying. This should be expressed as a percentage. And then a number of copies. In the simplest form, that's all that you will show. Let's say that you're with a really, really small press and they've only done a paperback and ebook edition. You'll probably just have two line items that shows paperback, X number of sales times X dollar amount, and then you have a percentage, and there's that math should math all the way across the line, and then you add up that far right hand column. That'll give you a bottom line number that should all hopefully add up together.
And do you want to go ahead and share with us some examples of statements? And I just want to make it very clear for everyone, obviously this is redacted information. We're not giving you insight into an author's actual statement, but it really does show the huge variety across the spectrum and what a statement might look like.
Yeah, so this is the simplest form. This is through obviously Novel Audio. They just do audio statements or audio sales. And so we just have digital audio, a number of copies. You can see there's a net number, the royalty rate, and then the amount of royalty that is being paid out. This person has earned out previously, so they had a $0 balance. It means that they were paid out last quarter, they had $0, and now they're going to get paid this $677 on this statement when this came out. So this is the simplest form. This is great. This is easy to read, I believe. And then sort of an average one here is Penguin Random House, where we've got a couple of titles and we have a couple of different formats that it has been sold in. So you can see on the left side, you've got hardcover, trade paperback, audio, large print, ebook. That's pretty standard on like just a regular domestic contract, that your main publishing contract is going to hold those specific rights. Again, you can see how many copies were sold in this current royalty statement cycle, how much this author earned, and then you can see cumulatively how many copies they have sold and how much they have earned. And then they still obviously have an advance that has not been earned out. You can see that's in parentheses. That means it's a negative number, has not earned out. And so this person will not be receiving any royalty payment. Nothing is coming in the bank on this one.
Before we move on to the next one, I do think it's really important to actually hone in on that point of the advance has not been earned out, because every so often I find that an author doesn't fully understand the calculation of how they can earn out their advance. Could you do a little bit of an overview on how we even get to the point of earning out our advance and receiving royalties? Now, obviously keeping in mind, this varies wildly based on your contract. Is it a hardback? Is it a paperback? Is it an audio book? Is it online? There are all sorts of different royalty rates. But if you could just give us a little bit of an overview about how we even earn out that advance in the first place.
Absolutely. And if we were to take this one, this person got a $500,000 advance, which is obviously like a quite large advance. That is not usual. You shouldn't expect that as an advance generally. But if they were to be earning $2 off of each book sale, that does not mean that the book sold for $2. The book sold for $34.99 or $29.99, whatever the list price was. The author is earning, let's say, for super simplification terms, $2 per copy. They would have to sell enough copies at $2 per copy to bypass that $500,000 mark. This is why we're not super pressed when authors don't necessarily earn out. And I believe it was Erin that said at the beginning that earning royalties is a huge accomplishment. It's not never. There are certainly people who do earn royalties, but it is also not totally unheard of for you to never earn out the advance. And don't worry, the for-profit publisher has taken this into account. They will make their money back. They are okay. You don't need to worry about them. But you would need to sell enough for your royalty piece to bypass that advance. We're not looking at list price like gross sales. This is off of your portion. Your royalty would have to bypass that number.
All right, thank you so much. And then, this is our second of three. Let's see the slightly more complicated version.
This is the one that I think of as the complex one, and I have unfortunately scrolled to the bottom. This is Hachette, and this particular contract, the publisher held on to a bunch of different little like subsidiary rights. In its simplest form, I do like that they put this summary up at the top where they show like what the balance was previously, how much this author has earned total cumulatively. There's no more advance left. There's no other payments that are being charged against this, how much they were paid in royalties previously. And then this person is still like unearned. They're not going to be receiving a royalty because they've got all of this here, right? So they also do current period on the left, cumulative on the right, and you can see how many units were sold for each one, how much the earnings were. When you're talking about a big complicated contract like this, you're often going to run into like escalators, which I'm sure we will talk about later on. And so you're going to want to make sure that you are paying attention to not just how many units sold this time, but how many units have sold across like cumulatively, because 33,000 hardcover units has likely pushed you into an escalator territory where you are earning a higher rate, and you want to be sure that that's being reflected in your statement. But this one, I mean, it's 12 pages long. We have a bunch of foreign subrights on here in British pounds, in Canadian dollars, in different formats in Canadian dollars. And these can get, it's an overwhelming amount of data, I think. If you are lucky enough to be selling in this many markets and in this many formats, please turn to your literary agent, turn to the royalties manager at the office, get them to help you parse out all of this data, because it's It's a lot. It is just an overwhelming. I know that I did not stop on any of these long enough to be useful, but you can just see like 12 pages of 8-point font. It's just a lot.
It is so much. And you are actually already teed us up a little bit for the next question. You mentioned escalators. So
Yeah.
obviously we have just seen a demonstration of how much these statements can vary across publishers, but what are some of the other details we need to pay attention to when it comes to looking at and understanding our royalty statements, which I just want to also reiterate includes understanding our contracts?
Yes, and that was the big piece that I was going to say is you need to really understand what your contract is. And this is where I'm going to say this an annoying amount of times today, that your literary agent is your biggest advocate in this process. They are experts in this very narrow piece of the law, and they know how to read and interpret your contract, and they should be able to explain it to you. I'm going to take a hard line and say that if you're a literary agent and no one at the agency can explain a clause in your contract, that is cause for concern. They should be able to explain it to you. They should be able to answer it. Even if they have to like talk to their lawyer to make sure that they're understanding this legalese that you're dealing with, they should be able to explain that to you. So they should be looking at any clause that mentions any sort of money, returns, payment schedules, accounting methods. They should be able to explain all of that to you.
So what is an escalator, for instance?
Sure. So an escalator means we will usually see, it's easier to do it in an example. So like for the first 5,000 copies, let's say that they're going to pay you 6% royalty rate. And then up to 10,000 copies. So from the 5,000 and first copy up to 10,000, they will now bump you up to 8%. 10,000 to 15, it becomes 10. And then like 15 and beyond, they'll pay you 12%. Escalators are not uniform. Any publisher who does use escalators, they will have their own math that they are using to come up with these. These can be negotiated sometimes, not always, especially some of the bigger publishers. They're going to stick a hard line in the sand and say like, nope, these are our numbers. You just sell more books if you want to make more money. But they can sometimes be negotiated. Literary agent, again, is going to be super helpful for that.
And then when it comes to other factors like foreign rights, what should we be looking for in terms of our royalty statements or conversations we should even be having?
So if your publisher, let's say like on the simplest side of this, that you sold World All to your original publisher. So that means that they have the right to publish in all formats, all across the world, any language. You definitely want to be apprised of when those sales are happening. Are they reflecting those royalties? The Hachette statement that I just showed you had obviously stuff in the UK and in Canada. Are they reflecting those royalties on there? When that contract expires, because foreign sales will often expire much, much sooner than your US copyright will, are they renewing them? Is that being reflected in your statement? This can be a lot to hold in your head. If you are going to be selling a lot overseas, it can be really helpful to find an agency that has a foreign rights manager, someone who has ways of tracking these expirations and whether or not these contracts are paying and whether or not you're being collected on. Many of the foreign publishers, they have higher thresholds because obviously like international wiring fees can be very expensive. And so like your US publisher might say, we will only pay royalties if you're over $50 or over $100. Where a foreign publisher might say it needs to be over $500 before we send you anything because it's just so expensive for them to send international wires. Or they will only pay out at the end of the contract based on whatever royalties there were. And they'll send you a statement for every year of the contract, but they will have rolled it all into one. There are a couple of different ways. You just need to know and communicate this ahead of time. It needs to be in your contract. And again, we've now sort of veered into, I'm sorry, I got off topic and we veered into like your managing all of your individual foreign rights. But these things do get tangled. And you might have one type of contract for one book and another type of contract for another. And I think it's good to realize just sort of how complicated this can get.
That I think is a huge part of this point is that we're essentially having to teach ourselves a different language, and that's the language of these royalty statements, in addition to making sure that we are hiring the right people to have our interests in mind and to communicate with our publishers, particularly if there ever ends up being a problem. Now, I did see that somebody had asked what are escalators again, just a little refresher. So I would say in simplest terms, it's an option where the more you sell, the more your royalty rate can come up. That is not uniform across the industry. Not everybody has an escalator in their contract. But I'm also curious, thinking about escalators, foreign rights, you know, reserve against return, which we'll get to in a minute. These kind of little factors, do they vary widely across genre in your experience?
Not so much across genre, but from one publisher to another, certainly. We will definitely see, I mean, the lowest number I've ever seen is 6%. And that's off of, like, if you think of some of the formats that don't have very wide profit margins to begin with. So something like a mass market paperback, where it is being made to be as affordable as possible. And so, like, the margin's already very, very small. But then you can go all the way up to, like, some of our digital things are like 35% of the net, right? So, like, that's a big wide range. The larger publishers will tend to have their numbers that they say, like, these are standard across all of our contracts. Um, they're not going to negotiate quite as freely with those sort of things. But they're pretty standard, especially, again, like, I don't want to get into too much like employment law, but this is what they're paying, like, employees, right, to a certain degree. And we can be talking about, like, salary discrimination, right? Like, they can get themselves into a little bit of trouble if they are allowing people to have, like, wildly different rates. So they are pretty standardized. But the difference that you're going to see is, like, in the advance up front, what they expect to be able to sell, and then what the list price is going to be. So, like, young adult fiction or middle grade fiction sells with a lower sticker price generally. And so, yeah, you're still getting 6% of list price, but that list price is now $9.99 rather than $34.99. And so the rate is the same, but the dollars in your pocket is going to functionally be different.
Which is a really great point. And I know this gets asked all the time. You already mentioned there tend to be industry standards. There's good reasons publishers are basically protecting themselves when it comes to having industry standards. Is that rate ever negotiable, especially after your book has been published?
Um, I this is going to be such a frustrating answer because you never say never, right? Like, there's always, like, an edge case, and someone's always going to be like, well, I talked to this one person who was able to do this one time. Um, Generally, your contract is your contract. In some very, very rare instances, if you've got a really strong lawyer on your side and you've got a really strong agent and strong reason for why you might be able to renegotiate that, you might be able to renegotiate that. This is extremely rare. I would not advise being like, I will just sign this contract and renegotiate it later, because that is not going to be the way that it's going to go. The only instance that I can think of was an author that they did renegotiate some escalators after the book wildly outperformed expectations. And I mean, we're talking, like, on orders of magnitude of 1,000, right? Like, this book just wildly overperformed, and they negotiated in an escalator and some additional, like, they I think of them as bonuses. I don't know why I'm blanking on the phrase, but, like, if you sell a certain number of copies by the certain amount of time, they will give you an additional advance on future royalties, because they know that this is now going to sell a whole bunch. I don't know why I'm blanking on that term. I'm sorry. Again, I think of it just as sort of like a bonus, like, you're selling very quickly and very well. And so we're going to go ahead and give you another lump sum so that we can continue in this vein together. And so those can sometimes be negotiated, or an escalator, if a book is, again, just, like, wildly overperforming expectations.
Now, we've already seen this come up quite a bit in the chat. It was a question that we had already prepared for. And I'm just going to queue up for everybody that this is also going to be a little bit of a frustrating answer, because there's not a uniform answer across the industry, which is, when are royalties paid?
Okay. There are, so you could be monthly, quarterly, biannually, or annually. Those are really the four schedules that we're looking at. Monthly is basically just Amazon. And that goes for their self-publishing as well as their traditional publishing. So like 47 North and Montlake and all of those folks, they will do monthly. And then there is a delay on that, right? So like you get your statement at the end of June, but you're not going to be paid for 60 days after. Then we have quarterly. Those are usually going to be smaller presses or some of the audio publishers will pay quarterly. The most common by far and away is biannually, so twice a year. And then within that, they will pay, it is statement gets issued the last week of March and the last week of September, with payments landing first week of April, first week of October. That probably, I mean, just off, back of the napkin, that's 60% of our payments will come during those 2 weeks of the year. And then annually is reserved almost exclusively for overseas markets. Some university presses and some very, very small presses will pay out annually. There are, even within like that biannual schedule where most people are paying every 6 months, not all of them pay on that April and October schedule. Some of them will be like March, and what's March 3 plus 9? March and December. So they will be, I don't know why I can't add 6 in my head right now, but they will be on a different schedule. And those will even, unfortunately, be sometimes from the same publisher. So you can have multiple books with Hachette, for instance, but they're under different imprints. And some of your royalties will pay in January, some will pay in March, some will pay in April. And that there's just not a way to get those all on the same schedule.
I'm a May November myself,
Oh,
and
interesting.
it's not consistent in terms of the week of the month. Like sometimes it's earlier in the month, some years it's later. I just know to keep an eye out for them in those months.
As the person who is pressing send on those payments, I'm going to just remind you that I am also just a human person. I'm not paying your payments.
Oh,
This is just speaking generally. I am also a human person. And if you can imagine just like 2,000 bank transactions that came in over the course of 4 days, you're not going to be able to process them all by Friday, right? They take time to do correctly. And yeah, they get paid out over the course of a few weeks, and we're doing the best that we can, first in, first out, just trying to do the best we can and keep them straight and accurate is the goal.
well, I think this actually leads into a perfect point where for me, I have access with my publisher
Mm-hmm.
to see what my book sales are. And then I also see what my royalties statement is. So even though in some cases my publisher, we've set it up, they pay me directly, but with one, it comes through a literary management company. So someone like you is on the other side having to deal with thousands of incoming money. And then, I always know there's going to be a little bit of a lag between when my publisher posts that royalty statement and when I'm actually going to see the money in my bank. But, and again, question that's come up a bunch of times, not everyone either is aware of having access or does get access. So I'd love to talk a little bit about, there's not necessarily an industry standard, but what are some of the options for folks? Do you have a portal? Can you log in and see your sales? Or you're just kind of at the whims of whatever sales report your publisher sends you?
Yeah, you are at the whims of your publisher on this. Your literary agent should be super transparent. So, like, whatever they have access to, you should also be given. Like, if you want to pop in and be like, I want to see my sales every week, your literary agent will have a conversation, be like, this is what's reasonable for my workload. This is how we're going to make that work for you. Um, but they should, whatever we have access to, we are happy to pass along. We store everything in our agency in a portal that the author has access to all the time. Currently, they can go in and they can look at it. So if I've got a statement for you, I will PDF it and I will put it in your portal. It usually takes me a couple of days to get it over there, but you have access to it virtually immediately. Some publishers, yes, will give authors direct access. Some publishers will only give the agency access. And that just comes down to logistics. If you're thinking about like, HarperCollins has how many millions of people who want to be signing in, looking at that, and they can't maintain that server space. So they have the agency that is doing that. Your agent should and your publisher should be very transparent. But some of these smaller presses, we have to chase those statements. Like, I know small businesses are doing the best that they can, But they're just not on top of it. Like the 6 months will roll around, and then I give it a couple of weeks to be like, maybe they're just behind. Nope, they're not. We got to chase it. So we got to email people. And occasionally we have to email every single week and be like, where's the statement? Where's the statement? Where's the statement? Great. You sent us a statement that has money owed on it. Where's the money? Where's the money? Where's the money? And these smaller publishers, they often don't have the space to manage a portal. They don't have any staff to be managing that or responding to those requests. And so you are sort of at the whims of when they're able to respond. There is information in your contract that tells what your accounting schedule is and what the delay is on that. So if they say that your accounting period is January 1st through June 30th, you should get a statement for that period, and your contract will say that it's a 90-day delay. So then from June 30th puts us at the end of September, you should have a statement and you should have money landing within a couple of days at that point. So your contract tells us when we should be able to expect statements. And if you have a literary agent, we have trackers and like little alarms that go off and like, hey, these people all owe you statements. Where are they? And then you should have a delay, a number of days of when money is coming in due. That should all be outlined in your contract. If it is not in your contract at the time of negotiation, I would push very hard for that to be in there, but I'm not your lawyer.
We've mentioned a few times the importance of having an agent, and for some authors, including some who are viewing this right now, they don't have an agent. So do you have any recommendations, if you're kind of taking this into your own hands, how to handle it, what to do?
Yeah, so a literary agent, a lot of people think of them as like, oh, well, they're the person who helps me sell the book and who helps get me through the gate. And like, yes, that's true, but I think their bigger and more important function is they are your advocate in this process. And so you are going to have to learn to be your own advocate. And that is hard. That is really, really hard for people, especially if you're the type of person who pursued this as an artistic endeavor and you don't think of it as a business. I promise you, the publisher thinks of it as a business and they think of your book as an asset for this business. Like they are treating this as dollars and cents, and you're going to have to do that as well. So you got to set up reminders in your calendar of when you are reaching out to certain people, that you are emailing doggedly, that you are calling doggedly if you need to. And yeah, there should be a phone number that you're able to get in touch with somebody at the press, that you are able to email a person, not just a royalties inbox generally. And you might have to get annoying. Like some of these we've had to be very annoying in order to get paid on them.
I mean, if you don't advocate for yourself, who else will, is kind of the answer some of the time. And I think it's also just great advice to have an actual name. So it's not just going to an inbox that frankly might not even have anybody paying attention for most of the year, particularly for publishing houses where those royalties are just going out 2 times a year. And that's perhaps when they actually pay attention. I do also, I've seen a few different people reference interest on the fact that these royalties are held by the publishing house for many months at a time. In my experience, that's not a thing, getting interest on your royalty payments. I'm going to let you go ahead, though, as the expert.
No, that's not something. So especially like if we're talking about, I mean, let's look at the 2 extremes on this, right? So if we talk about these really, really small presses where it is just like one person and an inbox and a dream, and they are trying to do their best to stay afloat, the royalties that you are getting is, and again, in my experience, looking at these statements, $75 twice a year. If they held on to it for an extra 10 days, I mean, like, are you going to get a lawyer and go chase them down for 1/2 of 1 penny on the interest that they like? That doesn't seem like that makes a lot of sense. When you look at the big scale, so like Hachette, yeah, they held on to that money for 90 days. That was built into the contract, right? Like that was built in upfront, that this was part of their operating cycle. This was part of the way that they do business. They're not going to negotiate that you get to earn interest on the money that they are holding. They are a huge billion-dollar for-profit company. They're going to keep their interest because that's how business works, and that's just what's built into their contract. I have not seen anybody be able to argue that they should be paid interest on delayed royalties. Unfortunately, delayed royalties usually means that publisher is struggling in some way, at least the ones that we've had to chase down very aggressively. Some of them shut down a year later. Like there's not interest to be had. Like there's nothing for them. They're just trying to stay afloat. You're not going to get any of that out of them.
I kind of think about it similarly to taxes, where
Yeah.
folks who are just having money taken out of their paycheck in a traditional employment situation, if you're used to getting a refund, you're not getting interest on that money either.
No.
So I kind of think about it as the same thing. Can it be frustrating? Sure.
Yeah.
But unfortunately, that is currently the reality that we're all living in.
Yeah, and I say I'm like, you can be mad about this like intersection between art and business, and I genuinely mean that you can be mad about that. Like that's a frustrating thing. But we also live in a time in which you are able to be paid a living for your art, and so like that sword unfortunately cuts both ways. Sometimes there is a big for-profit company on the other side of this, and that's just the way the cookie crumbles, unfortunately.
I agree. Now, also when it comes to reading statements, I know one of the things that a lot of us see is this term reserve against return or something along the same
Yeah.
lines. So, first of all, what does that mean?
That means that people are allowed to return your book. And like on an individual scale, this might be just a couple of people, but on a large scale, this can be like an entire bookstore bought a bunch of stock because they thought that the book was going to sell really well. And then unfortunately it didn't. And they're going to return all of that to the publisher, and the bookstore is going to get their money back, which then means that the publisher is going to deduct that off of your statement. Publishers know that this happens. This is, and again, if you're thinking of like big, huge companies and you're like, this huge multi thousands of store location shouldn't be able to take my money back. But think about your little indie bookstore that wants to support authors and it bought 300 copies and only sold two. Should that small local community business eat the difference in that cost? They would go under. So they have to be able to return that stock. The publisher then is going to deduct that off of the statements and what they are paying you. They have a formula in which they are basically guessing how much is going to be returned for any particular author at any given time. And they will hold a dollar amount, a reserve against returns. Sometimes this is in your contract that it is only for a certain number of statement cycles or a certain number of months. But that is not always. Sometimes it's just in perpetuity that they will always have a reserve against returns, or that returns will always be deducted. The horror story is that we had an author who was writing academic nonfiction. A bunch of courses got canceled and 5,000 units were returned to the publisher. That's a huge number. That is not usual, but who absorbs that cost? And it comes from what the publisher is paying out on those, because those books didn't sell. They were not sold. I'm sorry, was there a second half of the question on that?
Well, I just think this is a good opportunity to talk about too, making sure to look for mistakes in your contract, because you just mentioned as well that for some people, the reserve against return will fall off after a few statements, but that's assuming it's been negotiated already in your contract. But if that's not true for all authors, it's understandable why sometimes a publisher might forget, deliberately or not, that shouldn't fall off, or that's supposed to fall off somebody's royalty statement. And therefore, if it stays on, and if your agent isn't doing their due diligence of looking through the whole thing, and you as the author, who is really the person who should be doing the due diligence looking at the whole thing, if you don't catch it, that's money out of your pocket. So that obviously being a possible example, but what are some other possible examples of mistakes or common mistakes that you've seen or authors have flagged for you on a royalty statement?
Escalators not being applied appropriately. It expired foreign rights constantly, that they will just like keep paying out royalties without paying a renewal fee on it. And it's like, that's great that you're paying out these like $35, but your right to this expired, buddy. You need to give us another $3,000. So those are probably the most common, is escalators not being applied, and then foreign subrights that have expired. Occasionally, and film gets really, really tricky and weird. And so this is why it's helpful to have a film co-agent, because when options do or don't get renewed like they are supposed to, and they do or don't get paid. Film also wants to pay really, really slowly. And so they will sometimes like pay their option renewal after the option has expired and you now get to sell that to somebody else. Like those get really tricky and really messy. And so I recommend having a film agent if you're going to be negotiating a bunch of options and film rights and things of that nature. Um, I think those are the most common mistakes that I see. Rarely you might see like just literally a calculating error. That those are again usually smaller presses where you know that it's a person sitting there with a spreadsheet rather than like an automated sales system that is generating these. It's usually like the smaller ones, and you're going to see and be like, well, that the math does not math across the line. That does not line up. Yeah, I would say those are the most common ones that I see.
And I do want to acknowledge we had a statement kind of come in that says the Authors Guild recommends a reserve for only 3 statements, but this person's publishers in 2 different instances, it looks like, did not agree to that deal and continues in perpetuity to take reserve, deduct reserve on every statement. And you and I had discussed a little beforehand that sometimes that is genre specific for certain types of authors. If publisher's done the calculation and those genres are more susceptible, I think in the academic example is a great one to having bigger returns, then they may be like, yeah, we're not doing the 3 statement thing for you because the risk is too big on our end.
And I think that one is also most books you're going to see like a big sale at the beginning and then like a trickle, right? Like the curve is pretty predictable for most books, and I know like there's 1,000 different cases, right? But academic nonfiction isn't going to do that. It's going to be like a constant spike and off, spike down, right? Like because it is every semester, and so they know that that risk shows up again every 5 months. We are not going to see a big spike in sales and then a slow trickle off. It just is not the same. It's just not the same at all.
For authors who are with perhaps a bigger publisher or a publisher who does offer some access to a portal that has book sales, it's possible that you might see a discrepancy between what the portal is reporting as your book sales and then what your royalty statement reports as your book sales. Might cut favorably for you some statements and might not in others. Could you explain why there would possibly be a discrepancy between what a portal is saying and then what a statement would be saying?
Yeah, and I would question where the portal is pulling its data from. So question where and when data is pulled for both sets. So either in the portal or for the royalty statement itself. So the portal might only be reporting from stores and shops and sellers that are reporting in through like book scan data, and not everybody is in that system, where then your royalty statement will then be all actual units accounted for by a certain date. Um, there might be delays on that data. So again, like if your accounting period for your royalty statement is January through June, but then your royalty portal is still updating in August when your payment shows up, well, it's had 2 more months of data. So again, like this information might be a little bit tough to parse out, but you're going to want to look at like when and where that data is being pulled from. And then if you still see a big discrepancy, there might be like rounding errors. There might be some returns that are in process. Those should be fairly small statistically. I know to you, like 200 copies might feel like a lot, but in the grand scheme of all books being sold in America, that's a pretty small number. And so these might be like rounding errors or inconsistencies. Stay in contact with your literary agent, keep a finger on it, but it is likely going to resolve over time. So like the next time you try to resolve that data, it's probably going to iron out, but you should definitely be taking snapshots, right? Like downloading PDFs, keeping records, paying attention to this. You don't want that number to continually get bigger and bigger and farther apart, but a little bit of overage here and a little bit of under next time, we're going to balance out in the wash, and like that data is all going to eventually line up.
I do just want to go back quickly to clarify for someone. The question came in, do you mean reserve against return ends after a certain amount of time? And I just want to clarify that what I was speaking to and what somebody else had submitted is there are situations where you have negotiated into your contract that perhaps it's, 3 rounds of royalty statements. So that's usually about a year and a half after your book has published, depending on timing. But 3 different royalty statements, maybe your publisher is allowed to keep those reserve against returns. And then after that point, it is meant to fall off of your statement. That for me is a situation where I did have that worked into one of my contracts, and I noticed that the reserve against return still lingered on my royalty statement on the 4th statement, and I flagged it to my agent, who then went to my publisher and said, hey guys, just a reminder, this is not supposed to be here. So I was able to recoup those funds for myself, and just a really important example of why we need to read these. We need to be our own advocate, and sometimes mistakes happen, often as an accident. If this is not industry standard, then that's just normally the thing that's going to stay on, and you have to be the one that's like, hey, just a quick reminder, in my contract it says we don't do this.
Yeah, I really appreciate you like reiterating being your own advocate, because you as a person have, a handful of contracts that you're trying to hold in your head. Your agent has 100 times as many. Their royalties manager has 100 times again, right? Like it gets bigger and bigger, and we're all doing our best and we are reading these, but you are going to be the person who's most likely to know and remember the thing that you had that was advantageous to you, and then after that your agent, and then whoever works at the agency. So like I forward everything to a literary agent first, and then they read it and review it, and then they send it to the client. But I'm looking at the whole agencies, so I'm more likely to miss something than an agent is, and the agent is more likely to miss something than the author is. So please, like, don't just rely on us. You should absolutely be your own advocate and be reading those statements and be familiar with them.
Nobody cares about your money like you do. I will just say it like that. And yes, your agent gets a cut of your royalty statement, probably 15%, but that's only 50%. You got 85%. So you care way more than they do when it comes to your paycheck as well. For those, and I feel like we've touched on it a little bit, but again, just to kind of reiterate, if you do find a mistake, if you believe that there are inaccuracies, especially consistently, that might be happening, what are the steps? Let's just reiterate those again, that an author should be taking. And I do want to add the caveat: what are the steps if you have an agent? What are the steps if you don't have an agent, to address the fact that you have inaccuracies on your royalty statement?
Perfect. So we're going to start with if you have an agent, and then the other line of questioning will join up. We will come together. So you're going to first reach out to the person who processed your payment and contacted you and sent you information. In our agency's case, that is me. And I'm the person who like mans the admin inbox as it comes in. And sometimes I just type a number wrong, right? Like I am still a person. And if you flag an error, I would love to fix it quickly. It is so much easier to look at the payment I sent this morning and say, like, whoops, I transposed 2 numbers and you got shorted by $9. Thank you. Let me fix that. Rather than trying to like dig through an archive of statements. So the faster you're looking at stuff and the faster you flag things, the better. Always, like, we love to hear from you and we want to fix them as quickly as possible. If the person who processed, if that's not where the error occurred, if you're seeing a problem on your statement, you're going to copy that royalties or admin person along with your literary agent. And I would ask some questions first. It's possible that you are misunderstanding what the statement is, or it is possible that there's a legitimate error. So you're going to open up that line of conversation. We're going to assume positive intent as much as we can, especially if this is the first time that it's happened, or if it's early in your career and you're not super well versed in reading these statements just yet. If your literary agent agrees, like, yes, this is an error, they are your advocate. And so they will approach the publisher, they will approach the royalties department, and they will open up that conversation and be like, hey, we've discovered this error. They're going to pull the contract, they're going to look at the statements, they're going to put documentation, they're going to come at this with evidence. If you don't have a literary agent, this is where you now enter the conversation, where we have conjoined paths at this point. So you are going to be your own advocate. You're going to reach out to the publisher with your contract, with the statement, and if you can, highlight and say, like, hey, this does not line up with this, and am I looking at this correctly? Can you explain to me what I'm seeing? And if there is an error, hopefully they're willing to fix it quickly. In my experience, they have been willing to fix it quickly. Um, we found we found a $37,000 error on somebody's statement there, which was great for the author when the time came along, because they were able to say like, "Hey, I've been doing a lot of public appearances. We really thought sales were going to change. Did they not? They did. Escalators should have been put in place." And over the course of 6 months, it added up to $37,000 difference in money. And so, but that was a simple like coding error on the publisher's side, and that was an easy thing for us to point to and say like, "Hey, this should have been 8% to this point, and then it should have been 10% here." And they were able to go back in, retroactively fix that, and they were able to send that money to the author. Uh, I have not experienced what would be the next step where the publisher says, "No, I didn't do that. We did not make that mistake." If that's the case, you're going to fall back on that literary agent being your advocate. And oh boy, like I could never be a literary agent. I just they are so great and so warm and so like invested in your art until it is time to be a dragon, and then they are a dragon. They will fight on your behalf in a way that I could never imagine doing. And so they will advocate, they will escalate, they will threaten legal action if they need to. Like they know what buttons they need to push in order to get somebody to do what they are contractually obligated to do. If you don't have an agent, here's where you're going to have to be your own dragon. And that is scary. Um, Even if you have had other jobs, other places, have you had to like go above your boss's head to try to get them to give you a raise that they said you didn't? Like, that's scary. That's hard to do. You might end up needing to engage an attorney. You're going to have to then weigh the costs. If we're talking about $37,000 error, it's probably worth getting an attorney involved in order to get that paid out, because they are probably also making these mistakes across the board for a lot of people, and you can correct a lot of people's statements. If it is a $17 mistake, I mean, that's up, you can spend your money and your time how you want on the principle of the thing, I guess. But that's less likely that someone's going to take that case on and help you out with that. This is why, again, a literary agent, that's their job, is to do that stuff. You don't need to engage an additional attorney because you've already got that person advocating on your behalf. So you're going to open up lines of communication, start with curiosity, start with assuming good intent, because it's most likely an innocent error. It's unlikely that a publisher wants to rip off an author. They need authors. They literally need you. You are the most important part of this process. They don't want to make you mad. They don't want to rip you off. Um, but sometimes businesses start failing and people get real scared, and you might have to advocate to make sure you're the first in line getting paid when things go badly.
Now, another reality of being an author is over time, books might stop selling so well, royalties might start to dip or even completely dry up. So we've had a few questions come in about, kind of a reversion of rights. Is it possible to ever get your rights back from your publisher?
Oh, sure. That should also be outlined in your contract as to like when they consider it to be like zero sales, when they will go let it go out of print. And that is, spoiler, not always actually zero. They might say if you've sold less than 50 copies for 2 royalty cycles in a row, that's a pretty common one. They will say that it's now out of print. We're not going to do anything for it anymore. If royalties happen to trickle in, we will continue to pay them out, but they're also going to not hit the threshold, and so they're not paying you your 15 cents over time anymore. That should also be tied directly to, actually, I'm not going to say that because I'm not your lawyer and I'm not your contract person. I would guess that that should be tied to your rights reversion clause as well. But your rights reversion, there should be a process outlined of like who you're going to talk to. I'm the person who writes those letters when the time comes, and so we are monitoring statements. We had one author who got his rights reverted on a book, and then the other one started to really dip, and we're watching real close. This person wanted their rights back very, very badly, and so we watched the tail do what it was going to do. And as soon as we hit that number of statements, we were able to send the letter out the next day and ask for rights to be reverted. There's usually a waiting period of like 6 weeks, either if they respond within a certain amount of time, or if they don't, then you've got your rights. But like, there's some language in your contract about how that's going to work. If your press has shut down and there wasn't a rights reversion clause in your contract, I am not sure how to proceed, honestly. This is where, again, having an advocate at the beginning of the process while that contract is being put in place is going to be extremely helpful, because after the fact, going, whoops, should have thought of that, is really, really difficult to negotiate. So, I mean, I'm not going to give you contract advice, but definitely look for rights reversion and out of print statements. Like, look for those things in your contract, make sure you understand them, and make sure that you know how to enforce them when the time comes, whatever that language is in the contract.
I just see that we've gotten a few, both pre-submitted and throughout today, questions that I'm going to say actually has more to do with estate planning than it does to do with like royalties. So I just want to flag that for folks, that if you have a question about what happens when you as an author or an author you know passes away, what happens to their royalties, what happens to their IP, that actually is a separate conversation that really has to do with estate planning, which we have done a webinar on before. So that is in the Author Guild resource library about estate planning as an author. This is an incredibly important part for us as authors. Make sure that your money is protected for the next generation. The royalties should not just die with you. Is that correct, Gina?
Yeah, I am going to put a plug in to please, even if you don't think you're earning any royalties, or if you think you're not, like, it's going to go out of print by the time I die, like, please, please put it in your will. Even if it is just like, this is the person who is the executor of my estate, they will also manage my royalties. You don't even have to like list out individual titles. I just need something that says I can legally send this money to somebody else. And then if you're being super forward thinking, you can then say, in the event that that person is gone, this is where I want it to go after that. We have had estates where we get the documentation over and the will says it goes to my spouse is already gone. And now we've got money just like sitting and being held in trust for someone while we wait for lawyers to figure this out. We also had royalties pay out on a title that had been out for like 25 years, and it suddenly earned out after all of these years, and money showed up and we had nowhere to put it. We didn't have anywhere to send it to. So that just creates just a lot of confusion and a lot of worry, where we are just like holding money and being like, who does it go to? We want to give it to somebody. So please, yes, include this in your will and in your estate planning. Even if you don't think it's going to be a lot of money, it just saves a lot of people a lot of heartache. And it is pretty straightforward. They just have to send us a couple of documents. We keep them on file, and then we send that money to the new person. It's fine.
Perfect. And sometimes there's a negative number for some folks that shows up on their royalty statements. Why would there be a negative number of copies sold?
Things get returned is the most common reason. Or there was like I guess if they were estimating and then it turns out like, whoopsie, that wasn't true. But returns is the most common that's going to happen.
And we did have a question come in about when the agent gets their cut. So if we're looking at the example of the royalty statements that you were bringing up earlier, and it says, $1.14 per trade paperback before the agent takes their 15%, or is it that the agent takes their 15% on the lump sum of the royalty statement?
Yeah, so we take our 15% off of whatever lands, or like whatever's been processed for us. So in the case of foreign sales, where let's say it's $1,000 for simplicity, that foreign agent took their $100, we will also take $100 because we're taking it off of that gross amount. Same thing, like we take it off of whatever the bottom line is on that royalty statement, we take our 15% off of that. In rare cases, this is usually like if the author is Canadian, in our case, because we are in the United States, if the author is Canadian and they're published with like HarperCollins Canada or Harlequin or somebody who's based in Canada, the publisher will send them their cut directly, just so we're not sending stuff back and forth across the border, because banks really like to change exchange rates to benefit themselves and not the other people. So they'll send that directly over here, and then they'll calculate what our 15% is in Canadian dollars and like send it over to us. We will sometimes, we've got some people that are collecting like very small amounts, and we will just roll those over until, we get up to, $1, and we take our 15 cents off the top of that. That's pretty rare though. That's unusual. Usually those authors are not super pressed about their 15%. They're much more interested in the new contract that is making better money and is actually supporting their families. Yeah, so we take our cut off of the royalties or the advance when it comes in.
I know this is actually a little bit more for the publishing house side, but I do think there's sometimes is stress around earning out your advance, getting into this point of earning royalties. If you don't do it, is it going to be really hard or next to impossible to get another book deal?
Largely no. Largely it's going to be fine. Now there are like degrees of this happening. If you had a $500,000 advance and your book just totally flopped and sold 12 whole copies, you're not getting another $500,000 advance, I'm sorry to say. But if you got a $40,000 advance and over the course of 3 years, you've only sold $36,000 worth of royalties, so you haven't quite earned out, you're probably going to be able to get another advance. Like, the publisher made money long before you earned out. And any publisher who is like, well, they didn't earn out, we're not going to give them another contract, your agent should be pushing back on that. Again, there are degrees of this, and I think you are smart enough, like I have faith in you, that you can see the degrees here and you can understand the differences. But no, I know tons of authors who have never earned out and they keep putting out new books, or their first 5 didn't earn out and it wasn't until number 6 that, like, just all these different things, like, or book 1 in the series has earned out but book 2 and 3 didn't, but they sold another new series, it's fine. Like, largely the answer to this is you're going to be able to keep publishing books. Are you going to get the same size of an advance? Maybe not. But also maybe yes, because the publisher makes money long before they're done paying you royalties.
We only really have a minute left here. There's one big question that has come in that hopefully can be kind of succinct as in an answer. When a publisher fails to provide a royalties statement, is this considered an immaterial breach of contract on their part?
Oh, I'm not a lawyer. I don't know. Well, you just said a bunch of things that I can't like, that just seems so crazy. I can't imagine that if you were to email and be like, hey, can I have my royalty statement, that they would just ghost you. If they do, that might be worth getting a lawyer. Again, you're going to have to decide what makes sense in dollars and cents for you. Yeah, I'm not the contract negotiator. I'm just the person who reads them and puts them into a payment system. I'm sorry.
Well, and on that kind of final point about if you've reached the point of, I know sometimes people ask about audits, auditing a publisher's book. If you've reached that point, what is your thought here?
I would say, like, you probably want a lawyer involved in this. If you're talking about needing to audit Penguin Random House's books, they're going to stonewall, right? Like, they're going to block you from being able to do that. You're not just going to be able to like knock on their door and be like, can I please see a ledger? You're going to need a lawyer. You're going to need some firepower. And you're going to have to make a decision as to whether or not that makes dollars and cents to you.
It would be probably a lot of money to escalate to that point.
These would be New York City financial attorneys. Yeah, I would guess they're expensive.
Well, Gina, thank you so much for all of this information today. This has been extraordinarily helpful. I feel like I've learned something new about needing to go back and check my statements of my contract. So I really appreciate it. And thank you, everyone who attended. On behalf of the Authors Guild, we really appreciate having you all here with us.
Thank you.